Hi, yeah. Let's just check some more trades that are currently trading now. Let me just check this Crompgreav and Havells. So I'm just going into the trade. So we'll see what is the current profit that this particular trade is making, and we'll just even check its historical calls also. So it's one very good script. This pair, sorry, in fact, it's a pair. So we have Crompton and Havells. And you can see that the winning trades are 88% here. So we have the highest winning trade and the highest losing trade also. Now let me just take you to the current trade that's happening. So this is the current trade that is happening in Crompton and Havells. We got this call on March 23rd. That is Crompton buy and Havells is supposed to short. Now what we are looking at is the first thing is the z-score, that should be 2.7 and above, and the next is your correlation. Your correlation here is very less, 46. We usually get into trades, we are looking for a correlation of 70%. And the left side symbol, the left side script, so that is in green, it is Crompton. So once this is in green, your RSI, that is relative strength index, should be near around 30. It can start 20 also, and it should be somewhere near 30, but it's around 20, no, it doesn't matter. And your volatility should be something like 2.5, which is okay here, 2.65. This is a risky trade, considering the correlation here is 46%. We are looking at something like 70%. But the advantage here is you have this winning trades. If you just see the winning trades, it's 88% or nearly 90%. So in this case, since it's a risky trade, you can enter. I mean, if you want to take that risk, you can definitely enter, or else you can just ignore this particular trade. So what happened? We entered on March 23rd. We went long on Crompton and we short Havells, and your z-score is 2.9, 46% correlation, and the next day your z-score fell to 2.43 and you made a profit of around 14,000 rupees. Now when you are having risky trades like this, if you are entering, you should be very happy with this kind of a profit. So it's overnight profit. So what is that you are investing here? So you can, I'll just come back to that also. So the first day it is 14,000, the next day it went down to 10,000, again 10,000, again on March 27th, this closed at 14,000 rupees. Now we are looking for a z-score of 2.16 here, but our exit is 1. So once you get the z-score 1, then you can exit. So in case if tomorrow the market opens and there is some activity on these two particular scripts, this particular pair, you might see much more profit once this z-score falls to 2 or below, and finally you exit at 1. So we will just check this trade again tomorrow once the market opens. Now let me just go back to the historical trades. Now we had 17 trades in this particular pair, out of which around 88% is your winning trades. Now let me just go back to the next trade. So this is the current running trade. The next, the previous trade was on July 30th, 2014. We have a backtested data of 10 years. So you can check all the calls that were generated some 10 years back. So I'm going to the next call, the previous call. So here you can see that the same thing, Crompgreav was a buy. Crompton is a buy, and Havells we short it at 12.13. Your perfect z-score is 2.95. We wanted a z-score of 2.7 and up. Let me just put it here. Perfect. Z-score should be So Z-score will automatically you will get it once your Z-score reaches 2.7 and above. You'll automatically, your system will automatically generate that call. It will give you the pair which one to buy and which one to short, and then it will tell you other factors like the RSI, volatility, and the percentage of winning trades. So it should be more than 2.7. That is the first one. The correlation should be greater than 70%. Your winning trades should be more than 70%. And next comes your RSI. RSI with the left hand symbol, left script. RSI should be around 30%. Now the same thing. So in case if your left hand script is in red, your RSI should be 70%. From 70% it will start falling. Now apart from this, you have the volatility. It should be around 2.5%. So this is what we're looking at. So now this particular trade, it got generated on July 11, 2014. So Crompgreav is a buy, and you have short Havells. It has given a 2.95, that is a Z-score, and the exit Z-score is 1. So you should be looking at 1 as the exit Z-score. Now let's just check. So the left script is in green, so I am looking at around 30%, 25% is fine with me. My volatility is around 3.5%. I was looking at 2.5%. That is the last factor what we look at. Now what happens to this particular trade? The next day your profit is around 12,000, and the second day it is 26,000, the third day it is 30,000, and the fourth day it is 63,000. And you can see that your Z-score here on 18, it almost fell to 1. So this is your perfect exit point, that is 70,000 rupees is your profit. Now in case you exit here, otherwise if you don't exit here, it will finally exit at this point, which is below 1. That is a final profit of 68,000 rupees. Now I would be on an intraday basis, this would have actually come down to less than 1. So this is a very good profit considering your investment is something like 1,40,000 rupees. It's 14 lakhs is the turnover. I am putting 10% is my exposure, 10 times, let's say. So around 1 lakh, for an investment of around 1 lakh rupees, 1,40,000 rupees, I am making a profit of 70,000 rupees, which is nothing but 50% return on my investment. So we can just, I think I don't need to show it, but anyway, I'll just show you. So for an investment of 1.4 lakhs, this is the profit that you are making. That is 50% profit. So that's a fantastic trade. You know that your correlation is 89% here. It fell down, and your Z-score was 2.8, 2.95. It fell to 2.8, and you can see that it started your left script. It started at 25, 30, 35, 49. You can see that 52 it ended. So that is a real good trade. Now 50% return on your investment. So that is the second trade. Now we'll go to the third trade. This is in April 2014. So we had this particular trade, again Crompgreav short, and we bought Havells here. This particular pair, your z-score is 2.99, 86% is your correlation. We were looking at 70%. So this is done, this is done, winning trades is done, it is 88%, and your left script, if it is in green, that is RSI should be around 30, but here in this case the left script, what we see here is the Crompton, it is in red, so our RSI should be around 70%. That is what we are looking at. So you can just see it here, it is 71%. That's a fantastic trade. Now we enter into the trade and you can just see the profit. So the second day is around 5,000, the third day is around 6,000, the next day it is around 5,000, and then it fell down to, it went up to 23,000, 35,000, 38,000, and finally it closed at 0.7, that is a total profit of 51,000 rupees. Now 51,000 rupees, and your investment is around roughly around a lakh of rupees. So that gives you a profit of 50% return on your investment. So this is the third trade. Likewise, you can just see even this trade. This was on December 9th, 2013. We had a short call in, we went short on Crompton. We bought Havells. 66% is correlation. We were looking at 70%. And your RSI should be 30%, sorry, 70%. We have got 76% here. So what happens the next day? The next day it went under a loss of 1,000 rupees, 1,400 rupees. The third day, you will always see whenever you get 3 as your z-score, always try to exit one lot near 2. So always it's better to enter 2 particular lots for a single trade. You try to book first profit whenever you get around 10 to 15% returns, and the next profit you try to book at when your z-score becomes 1.0 or slightly less than that. Now here 3 I entered, 1.8, your profit is 23,000 rupees, and then you can see, so 1.17, 37,000 rupees, 1.13 it fell down, 37,000 rupees, and 0.75 it ended at 49,000 rupees as the profit. So roughly, in case let's say you have, I'll round it off to 50,000 here, 50,000, and when my z-score fell to nearly 2, I made another 23,000 rupees. So that's roughly around 73,000 rupees on 2 lots. So you can just calculate what is your return on your investment. Your investment will be something like 80,000 or 1 lakh rupees, and your profit is 49,000 rupees on one particular lot. So this is also a fantastic call. Now let's check the other call. Okay. This call we got it on June 12th. You can see that Crompton was sell, Havells was, sorry, Crompton was buy, Havells was sell. 2.18 is perfect, but you just check the correlation. Your correlation is 5.8, which you will never enter. So when once your correlation itself doesn't match, then there is no point in entering this particular trade. So you, in case if you end up entering into the trade, it's a risky trade. You never know where it will go. It started with negative profit, negative, and then it started going up. Now this is a risky trade. In case someone would have entered, fine, but if you ask me, better to avoid this kind of trades where your criteria doesn't match. But nonetheless, it gave 42,000 rupees profit at the end of the trade. So it might go, it can go anywhere. So you'll have to always be careful in taking the trades. The same thing here. You see the correlation is 2.5 here, and then negative, and then it went into positive, and finally it gave you profit. But the reason why we do this is we know that the winning percentage is very high here. So in case if let's say once you enter in 2-3 days it gives you 10% or 20%, you can definitely exit and don't wait till this 40,000 rupees or 50% profit. So these are some of the trades that we have. So you can see this trade. This is also an wrong trade which you should not be entering. 24% is the correlation. We are looking at 70%. The z-score is fine, 2.8. So the previous trade, we know that the correlation was around 5-6%. Then we made a profit, but in this case, I don't think you would have made any profit. It would have been a loss call. So what you are seeing is 88,761 is the highest losing trade, what you are seeing, but you won't be actually entering this trade at all because your correlation doesn't match. 70% is too far away from your 24%, so you don't enter the trade at all. So there is no question of your loss at all. So likewise, I will show you some more calls. So this is one good trade. We can see that Crompton short, Havells buy, 3.26 is your z-score. So your first condition is done. Your second condition is your correlation, perfect, more than 70%. Your left hand script should be around 70%. 70% you are seeing it here. I am talking about this condition. And then your volatility should be around 2.5. It's 2.39. Doesn't matter. Now just check this profits. The next day itself it is 30,000 rupees. That's a fantastic profit. You could have easily come out of that particular trade. So I'm talking about this particular trade. So the next day it is 30,000. Your z-score fell to 1.4. I told you when your z-score falls from 3 to around 2, you should book one lot profit. Now it went. Your profit got came down. Your profit came down. But finally, at the end of the day, that is end of the trade, you have made a profit of 32,000 rupees. Now that is the importance of this z-score and your correlation, your winning trades, and your RSI. So once all this combine, you get perfect trades, and there won't be any question of your losses. So this is also a perfect trade. You see 2.71 is the entry, 82 is your correlation. It will be 30, 36, so slightly higher. So we enter the trade, the first day it's around 6,000, then loss, then loss, then loss, and then finally it gave you a profit of 20,000 rupees once your z-score fell to 0.68. Not big, very big profit, but it's a very decent profit. But your call is a perfect call. That is what I'm going to say. Your correlation, your z-score, your RSI, everything matches here. So we are seeing the next trade here. Again Crompton buy, Havells sell, 3.24 is your entry, 69 we are looking at 70%, so 0.5% down, that doesn't matter, we can always enter this trade. And the left one is 16%, we were looking at 30% here, doesn't matter. The next day 11,000 rupees is your loss, 3.24 became 3.22, but it fell down to 2.35, you book your profits at any of these levels, 43,000 here, 41,000 here, then 57,000. So once you book, now 57,000, you can see that it's 1.63 is your z-score. And finally, at the end of the trade, in case if you would have stayed such a long time, 0.98, see any z-score which starts should always come to 1. So that is the idea. So you know your exit. You're already decided about your exit. So your total, final profit will be 30, but in case if you could have exited at 50,000 rupees profit, that would have given you at least 50% return on your investment. So these are conditions that you will have to strictly follow. So there is another trade here. 78% is a correlation, 3.17% is your Z-score, 66% somewhere near to that, 4% is highly volatile. So when you have this 4 or 5%, try to be a bit careful and try to exit with at least some nominal profits. It came under loss, went to 24,000 rupees loss, and then finally it ended at 16,000 rupees profit when the Z-score became 0.93. So that is how the whole system works. Now you have seen losses, but you, at the end of the day, you will book some amount of profits provided your Z-score comes to 1 and you follow these conditions. Not usually all the trades are for longer duration. There are some short trades also, like this 1, 2, 3, 4, 5, 6, 7, 8, 9 days. 9 trading days is what it took. 91 rupees you went long, 111 you went short on Havells, 3.35 is the Z-score, 69% we were looking at 70, it's almost near that. And your RSI should be around 30%. So here 31%, highly volatile 11%. That's a bit risky because it's highly volatile. So it comes down. So after 9 days, your Z-score falls down to 0.37. You have made a profit of 1,52,000 and you have actually doubled your investment here. That is May 9th, 2009. So roughly around 1 lakh rupees was your investment. You have made 1,50,000 rupees. That is nothing but 150% return on your investment. So I am just showing it to you here. This is the final turnover, 1.11 lakhs 38. So considering you get 10 times, you will be investing 1.1 lakhs or roughly say 1 lakh average, but your profit is this 1.5 lakh. So you have actually not doubled, you have made 150% return on this particular investment in a span of 9 days. Very simple trade. So let me just show you the next trade. So again, your correlation is good, very good, 93%. Your RSI should be 70, it is 71%, fantastic. Slightly worrying is your volatility, which is around 4%. That is the last case what we consider. The next day 16,000 loss, the second day it is profit 53, 73. See, your Z-score from 3 to 1.26 has given you 73,000 rupees profit. You should have been very happy doing this trade and then check out of that trade. But in case if you would have stayed till the end, this was your profit. So entering in 2 lots is a very good strategy. 3 becomes 1 or 2. You exit your first lot and then retain your second lot and try to end your trade. Then your Z-score becomes nearly 1 or less than 1. So that's around 55,000 rupees on this particular lot and another 73,000 on this lot. So you can just calculate the profit. So this is another trade. You can see 69% correlation 2.87 and this will be 70% will be your RSI. It's 64, but highly volatile 8%. You are looking at 2.5%, and then your trade starts next day 6,042. So your 2.87 becomes 1.8. You book your profit here, 1 lot. Then next, go back to the next. You till your Z-score becomes 1, you have made a profit of another 60,000 rupees. So that's roughly around 1 lakh rupees profit on 2 lots. This is a very small trade in the sense it took only 6 days, 77% correlation, 3.08. First day profit, second day loss, third day loss, fourth day profit, fifth day profit, finally it became 52,000 rupees. So that's roughly around 50% return on your investment. This is also a very good trade. 73% correlation, 2.92, that's roughly near 3. You can see on the first day itself 17,000 rupees profit, and then your Z-score started falling down, and finally it ended at 0.89 where you have made around 38,000 rupees profit. So this is a very long duration trade. 88 is a correlation. You can say 3.28. It went down to losses. Then you can see the losses here. So finally it ended as a loss of 58,000 rupees. But it definitely gave you a profit also at one point of time where you could have exited. All these days are your profit days. So there are some trades like this where you'll get perfectly a good score, but you might even end up losing that trade. So let me just show you what will be the. So your volatility here is too high, that is 5%. So in other cases your volatility when it was 8 also it was not a problem, but in this case this highly volatile high volatility has dent your profits. But overall you could have made profits, that is from the loss to a profit, but finally this particular call ended in a loss. So we have one more trade here, 70% correlation. 3.72 is your entry, 85% is your correlation, 70% is your RSI, and then you can see that this is the profit at which it ended, that is 37,000 rupees profit on this particular trade. So these are some of the trades, the 17 trades what we are seeing. We have seen like 17 trades. So if you enter a particular trade, I have already shown you this is not a loss at all because you wouldn't have entered that trade. There was only one loss call of 58,000 rupees. And in the middle it also gave you some profit, 10,000 rupees profit. But overall, in case if you just have a look at your conditions to enter into a trade, and then you take a decision and then you place your trades, your profit would have been amazing, and your losses would have been only one loss call. So out of 17 calls, only one loss call, rest of all the calls were in profits only. So this is how this paid trading system works. So it will give you the complete data for 10 years. You can check all these calls with your NSE data. You'll get a fair idea about how this whole system works. So you'll automatically the call is generated in your application itself. What you'll have to do is you'll have to decide on this few factors: correlation, winning trades, RSI, and volatility, and you exit at 1. So this is a very simple way of trading. where your losses are minimal and your returns can be double in one trade or 1.5 times in one trade what we have seen. So this is how the whole system works. Foolproof, you have the data, you have the back-tested data. You can, once you know that your winning trades are high, you can enter into that particular trades. And we do have some trades where we have 100% winning trades like Tech Mahindra versus Oracle Financials, IB Real Estate HDIL, IOC BPCL, and we have some trades where your winning percentages is something like 80 to 90%. We will check all these particular trades in the next video. Thank you. If you have any doubts, you can just message me or call me also. So my number is 974321133, or you can mail me on mon2944@yahoo.com. Thanks for coming. We'll get into the next video in a short while.